All right, guys, I'm going to explain to you a big secret about the marketplace, about where liquidity actually gets swept. Are you ready? 3, 2, 1, go. What have I done here? I've drawn lines for all the major stock market indexes, or the major stock markets around the world, the major countries that trade. When do their stock markets open and close? There are traders from all those countries that will trade this asset. Not only that, but their own index, the interrelation between that index and this index will cause an impact on this index. So at these times, the open and the close is where the highest volume comes in. Now, obviously, some of these countries have much less of an impact on this price than others, but there's still going to be liquidity there from the traders who are entering and exiting positions at the open and close. At the open, traders are closing positions from previous days that are either in profit or in loss, like it'll hit their stop loss or it'll hit their profit. And at the close, they'll do the same thing. They'll open new positions and they'll close positions. So when there's an influx of people opening and closing positions, that's a place where there's an exchange of enough orders that allows a large institution to get filled, right? So if you just look at these lines, now it may seem cluttered, and yeah, there's a lot of information to process here, but obviously some countries are more important than others for trading. As you can see, this right here is the Asian cluster, and people will call this the Asian session, right? The Asian session is like kind of starts here right at the open, which is where Australia opens. So right when 6 p.m. New York time, when the futures market opens again, that's actually also when Australia opens. Okay, so just note that. But also then it moves on to the more important countries like where there's a lot more money coming in: Japan, Singapore, China, Hong Kong, India. All these markets open and then they start closing too. So this whole area, there's a lot of liquidity here. This is why during the New York session, you'll often see it come and take out all the stuff that happened during the Asian session. It'll come sweep all that liquidity. The reason isn't that, it's just the Asian session that's sweeping it. It's actually like hunting stops from traders at each of these countries. Okay, and as you can see, there's a big cluster right around here: Japan, China, Hong Kong, and Singapore. There's a lot of smart money there, right? So it's going to get attacked, and as you can see here, it gets attacked multiple times, gets attacked almost again. India also, there's a lot of volume coming in from India. Now, that doesn't look, compared to New York, it's not a lot of volume, but as you can see, around when India opens, as you can see, there's a tiny spike in volume. Now that may look tiny here, but that's still considerable. That's still liquidity. Okay, so this is how it works. And again, you can use volume as the footprint for these countries, right? So during this session, it seems like, not a lot of liquidity coming in, but as you can see, there's little spikes here. Japan opens. Singapore opens right there. As you can see, the volume spikes up when Singapore opens, right? And there is a movement in price. Right, so and then when China opens at, I believe I may have missed it by a little bit. I think it's right. Oops. Oh, I have two layered. Oops. I think it's like right there, but basically I think it should be at a 5. Yeah, so right here at the close of the 825 and the open of the next one is basically when China opens. Right there. So like, as you can see, when China opens, there's a spike in volume. Then the volume kind of starts drying up a little bit. The traders, less traders opening positions. India opens, right there. There's a spike in volume. Australia closes. There's a little. And price will reverse. That's also how you know. And so as these things open and close, you're going to see liquidity swept. But it's not just going to be then, it's going to be later. It's going to revisit that liquidity, especially from the opens. The close can also be strong too, but the opens especially. It's going to sweep all that liquidity, right? Then the USA opens. That's the most important market in the world. Sweeps the US Open, then a lot of the Asia stuff, right, comes back up, Also, right when the U.S. opens, you can tell that U.S. traders are attacking Asian traders, right? And I'm talking from an institutional level. Okay, look at this. Europe and London are off by an hour from each other, right? So the Europe close at the end of the day, after it sweeps all this again, it goes up and attacks the Europe close. Doesn't quite attack the London close, though. So yeah, going to be highly nuanced, but I'm just showing you why price moves. It's attacking stop losses. People need to lose in order for other traders to get filled and to have winning trades, right? Boom, 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 takes out all these sell stops, and then that gives enough exchange happening for traders for new traders to make exchange with the stop losses of those traders, and then it allows price to move up, and then it sweeps it one more time. The reason it's sweeping this right here, when it comes up and rejects there, I'm not going to give that away. That's a little secret of mine. But basically, the reason why it sells off from here again and sweeps liquidity one more time is the same reason why price rejected here and why price rejected here. I'm not going to explain why. That's my last little secret that I'll probably never tell anyone, unless they're working with me in order to develop better strategies, manage risk better, stuff like that, to help me make more money and we help each other make more money. Unless someone's working with me on that, then I can't really disclose that. There's one special liquidity sweep that I haven't told anyone. I have told some people, but not on YouTube. But yeah, there's a special liquidity sweep right at this candle, and yeah, that one's a little secret. But this should be enough for you guys to probably find better trades. Like whatever you're using, if you're having a system that's working for you, having this stuff to consider on top of it's going to help you, especially right here. These Asian countries, China, Japan, Singapore, Hong Kong, India, this whole area right here is prime target for catching a top or bottom once the New York session starts. And the New York session starts at 9:30, but also remember that the futures, T+2, which I think next year is going to be T+1, it gets settled at 8:30. So Fedwire opens at 8:30. So you might want to mark out Fedwire open right here too, because that also is where liquidity gets swept. And then also one other thing you could do is midnight open. So, but that's also I think that's Australia close, right? So you don't really have to mark it out twice because you just know. So midnight open for US is Australia close, and also futures open at 6 p.m. is Australia open. So interestingly enough, those are important times for traders, but it's also where it lines up with Australia. So there's added liquidity there of not only new futures traders coming in the US, but also there's Australian traders. Oopsies. Anyway, but that's still, I don't think Australia has a ton of liquidity. It's really these big Asian countries right here. This is where you're going to find the liquidity, because Japan, it's not the biggest population, but there's a lot of traders in Japan. There's a lot of money in Japan, right? There's a lot of big money. Same with Singapore. Not a huge country, but there's a lot of affluent people there. China, there's not as many affluent people there, but there's a ton of people there. So there's going to be lots of liquidity from just smaller traders there. Hong Kong, you're going to find kind of in between. There's some affluent traders and also just a lot of people. Yeah, and then there's countries where Brazil, where okay, it's probably not going to be as big, or South Africa, right? You're not going to see as much volume from South Africa, but there's still going to be some volume, right? Where's South Africa open? Yeah, it's right when China closes. That's also something you might want to note is because when one closes but another's opening at the same time, there's probably going to be slightly more volume there too, and so there's probably more liquidity there. So for example, Hong Kong closed, London open. Two big trading countries, that's probably going to be an area where liquidity gets swept and there's a reversal. So if you look later, yes, it blows through it multiple times. So, again, you have to manage risk and get nuanced with this. But there's going to be some point throughout the day where it's going to go back right to that level and then reverse from there, which it does right there. So, hard to say exactly when it's going to do that, but it is what it is. You can definitely study that. But you can, like what I'm saying is that you can pinpoint an exact time where price reverses exactly from that area, and you can know that it has something to do with the liquidity that was there. Now, it could have gotten swept already during all this, but if you studied price, you know that levels that are valid can be invalid before they become valid. So like a level can be established and then they can obscure it with a lot of boom, 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 that stuff. But eventually it can be respected. So again, something to note. This isn't going to just instantly make you a profitable trader, but this stuff will help you to understand why markets move, which is that they're looking, it is looking for stop, or it's looking for orders, and orders are where people have their take profits and their stop loss, right? So price will naturally, whether it's manipulated or not, which I believe the price here is manipulated, but it doesn't matter, because if it's manipulated or not, it either way will end up inevitably gravitating towards orders eventually. Because the reason that the markets are manipulated is just because there's really good traders who have a lot of firepower. And so the only way for them to make money is to essentially manipulate the market. And so inevitably, even if there's if a market starts off with no manipulation, eventually the best traders in that market will begin to, as they get better at trading, will begin to manipulate the market in such a way that they make money from it, right? So it's just it will always naturally occur in any like free or semi-free market. Like it will inevitably be manipulated, so that doesn't really matter. So it just naturally will gravitate towards orders. And so I'm just showing you like, hey, this is where it seems logical that you would find orders at these levels. So anyway, take care, guys.